Lighter crashed hard, but something interesting is happening at $1. Because whales are buying, buybacks are accelerating, and half of the supply is locked. So is this the bottom for lighter? Let's find out. So welcome back to Coincheck. This is Abhishek and you're watching 3.2 TV. GM everyone, LIT looks like it stopped sliding. Sustained buybacks, whale buys at the $1 area, and heavy staking are carving out a floor. Here's the short trade map and why traders should care. So anyone who's newer and is wondering what is Lighter exactly, so Lighter is a ZK rollup layer 2 perp exchange. Essentially, it's a place or a venue where you can come and trade futures and crypto on the blockchain on the decentralized platform. It lets traders run high leverage perpetuals on-chain while protocol revenue funds ongoing market buybacks and staking incentives to support the token. So what's the fundamentals? What's been happening with Lighter lately? So number one, the buybacks have built a very nice floor because since January, the protocol repurchased 7.48 million Lighter tokens. That's almost 3% of the circulating supply. Using fee revenue and that helps, the buybacks help you to reduce the supply gets reduced, the demand goes up, the price goes up. So it's a complete flywheel. Next, if we look at the smart money accumulation, because we've seen on-chain signals accumulation at the $1 zone, there was a notable whale buy of $729,000 reported for Lighter, and Lighter also has staking, which has crossed more than 50% of the circulating supply. So half of the supply is already staked, and people are trying to earn revenue out of interest out of it. If you look at the TVL and revenue pain, it has been there's been a lot of pain around it because TVL fell from $870 million to $615 million, and the daily fees for the protocol collapsed from $1.5 million peak, and now it's ranging at $100,000 to $280,000. So that's why the price dropped, but buybacks are continuing, they're strong, and it's converting shrinking revenue into direct token demand. If you look at the market behavior, the perps volumes cooled down from $19 billion peaks to $2 to $4 billion recently. Selling pressure dominated for a short while, but the recent 13 to 20% bounce shows that buyers have strongly defended the $1 zone. It's made a bottom there, and that is the main thesis, the bottom and the buybacks. So if you look at the price of Lighter, it sits at $1.19, the market cap sits at $297 million, the TVL sits around $620 million. In the last 24 hours, it's gone up by 13%, but overall it's gone up by 19 to 20% from the $1 bottom it made. So now we'll move on to the technical analysis. So welcome back, guys. Now we'll be looking at the technical analysis for Lighter, as you can see here. First, if you look at the entry range sits at $1.15. That is the first upper entry range. The lower entry range sits at $1.05. Why? If you look at the price and analysis for Lighter has been in a continuous downtrend. It has been continuously going down, and it finally bottomed here at $1. So this is the price that it had. This is $1. It went a little bit below $1 and then it came back up, and it strongly went up by 20%. It hit $1.2 and now it's again cooling off. So this is the upper entry ranges that touch 1.2. So we want to get down here at 1.15. And then if it goes back, this is the range it was trading at. It broke down from here, it was trading here, it was trading here. So that's the range we're looking at. We want to buy and enter there. So that's between $1.05 to $1.15. A stop loss is just below $1, the previous low that was around 0.9798. So you want to keep a stop loss at $0.95 to be on the safer side. The main thing here is that we've got three targets. Target 1 sits at $1.5, target 2 sits at $2, target 3 sits at $3. All psychological numbers because we defended the $1 bottom, we defended the $1, made it into a support. So now, even these numbers act as a psychological number. 1.5 is very easily achievable. It's a trade that it has traded at before. $2 is a high that it made a very long time ago back in February. So this is the $2 part, and $3 is obviously a little bit above the previous all-time high that it had made. So what's the verdict? Buybacks and concentrated staking and visible whale buys at $1 is a high profitably tactical box. That is if the volume stabilizes. Lighter looks bottomish. This is a tactical perp dex rebound trade. Reward is asymmetric if fees and TVL stabilize and buybacks continue very strong. So that marks an end to today's Coincheck episode. Remember, this is not financial advice. Please consult a financial advisor before making any financial decisions, as crypto is a highly risky and volatile market. Thank you for watching 3.2 TV. Subscribe to our YouTube channel to be updated with the latest news and developments happening in the Web3 space. I'll catch you guys again on my next Coincheck episode on Monday. Goodbye for now. Happy weekend and happy trading.